monologue here. I just want to do my own amateur analytic attempt here to show and see what I'm seeing in the charts and what to look out for, whether it's going to go up or down in the next phase here, and what we're looking at here when we look at the charts. So let me get rid of this news here because it's not really, but yeah, this is just to show that depending on what news you're looking at, that you see cases for both. It's going to go to 100 real quick, or it's going to go back to 50 real soon, and there's cases to be made for both, and that's what the point of this video is, just based on the charts alone, not on the news, which you can read on your own. But yeah, so basically we're going to go straight. I'm just going to close this for bandwidth to the charts, and the immediate pattern I'm seeing today, following today's bounce and confirmation here that it didn't break down from this current trend line down here, is a potential diamond pattern, or I guess it's an inverse diamond pattern. It's at the bottom. Diamond patterns, well, of course I could draw an extra line here to make it more obvious, but you see here there's a peak here, and there's a trough here, and there's a descending lower low here, which becomes a higher low here, likewise on the top side. From your peak here, a higher high, and then a higher low here, and then we basically come to this descending point here where it's got to make or break one of those two trend lines. But usually these are at the top, or they can be on the top or the bottom, and they could indicate a reversal trend. So in this case, we're experiencing this bearish momentum, right? Coming down here from that late January dump here, and then this bounce here, and then rejection here, bounce here, rejection here, and now we find ourselves here. So something's got to make or break soon, and that's why there's all this speculation on the news of what's going on, just based on the technical charts alone. And so if it is a reversal diamond pattern to be confirmed here soon, the target that we would use to say where it's going to go is basically you want to measure from your peak here to your trough, your highest point to your lowest point, so right of the diamond there. So in this case, I've just drawn a rough or so line like this. So that's basically our target line that we can use, that if it breaks this trend line here with conviction, let's say in the next 2 or 3 days it goes up to this resistance right now and it breaks it with conviction. I mean, sometimes they could just break and shoot up, right? But oftentimes there could be what they call a fake out. So it could come up here and people put all their bets in and bam, it drops right and dumps, right? So that you need confirmation. You need confirmation with volume, so you can use volume indicator to kind of see where the trend is going there. As you can see, this is what the volume indicator looks like. Rising, like you got sell-off, sellers right here are dominating, and then the buyers kick back in through this consolidation phase, and now the sellers are trying to break down this point here, this bottom trend line. But anyway, if it should break this resistance, and oftentimes you need, like we're looking at the hourly candles right now right here, the hourly time intervals, but often what you need for confirmation of breaking of trend lines, it needs to come up and it needs to retest on that same time interval, that same trend line, which it's resistance now, but once it breaks it, it will become support. So it needs to retest that, and if the support holds and the momentum of sellers is in there and it's rising, then it's a confirmation. It's one confirmation that it has broken the trend line, and then you can expect it, therefore, to reach its next target, which in this case is right about $100, right? It looks like 105 according to my line here. If it breaks that trend line there, and we can see at $100, which is a very psychological point, you can see right here, even when we reached our all-time highs, it spent a lot of time around there. So there's a lot of resistance at $100, which can become support, and that will determine where it will go in the next phase, should it go that way. Now, however, on the reverse side of things, if it doesn't break that resistance here, if it goes up, it tests, it gets rejected, and it comes right back down here, or it never gets up there, let's say the sellers went out here, we're still watching the volume, basically, is what these candles are, these red and green candles here, who's in control, and it breaks down, then likely what we could see is the pattern that is forming is actually a descending channel, so which is technically bearish at this point, right? So it could come all the way back down to this trend line here of this descending channel. It is likely to do that. If it's rejected here and there's a big sell-off there in the following trading sessions, most likely it'll eventually ultimately come back down to here, which we're looking at about $50, $55, which is the argument. A lot of people, it's going to be 50, and there's a lot of buyers there. I would presume there's a lot of buyers at 50 who will be there as support to hold that line should it come back down very soon. And then this same trend target line here, which is basically from the channel top to the bottom here, you can use that to determine the next potential target should it break down even further. Should the capitalists shorting the market to get cheap silver take control and get it to dump yet again, our next target would be around $30. So that's where these numbers kind of come from. Not only that, you can also look at the macro scale. You can see like different resistance and support levels in the past. Like we're probably having to go back to 2024 here to get these levels. 2025, when it was kind of hanging around $30 to $50. But yeah, that's what we're seeing here as far as immediately. What is it doing? Is it forming this diamond pattern here where it's going to break and go to the moon, and we're going to get back to the 100 level, and then we're going to play a new game there, whether it's going to test and ultimately breach the all-time highs, 120, and then up to 150, 200 to the moon, right? Or is it just going to get rejected and continue down this bearish momentum in favor of the capitalists who want cheap silver? We will see. We will see. That is what is certain. In the next, I'd say, week or 2 weeks, we're going to see some kind of price action, likely, because usually when this kind of happens right here. And also another thing to keep in mind and look at as far as indicators, as you see on my screen, I didn't mention much here, is we've got the RSI, which is the relative strength index, and as you can see, I'm using the value of 14-day relative strength index, and basically it's another confirmation of what you're looking at. Above this zone here, so above 70 value here, you start to get an overbought territory, meaning that the bulls, the people who are buying all the silver there, their momentum is starting to expire once they get up into this territory. Like as we saw when it reached its all-time high here recently, that the buyers were starting to get exhausted, and that's where the sellers come in, right? Once you get here, then they start to sell it off and push it down, and then on the reverse side of that is you have oversold territory. So when the sellers get exhausted, the RSI drops below 30 here, and you start to get into this territory, which could be an indicator of a reversal trend, as you can see. Right after the sellers got exhausted, the buyers kicked in, and they gained momentum, and there's a continuous battle going on between buyers and sellers, basically, right? And so an RSI indicator is helpful to tell you whether, if you're on the buying side or the selling side, whether they have the power, the strength, the relative strength index is what that is, right? To continue on whatever momentum. But it is ideal to use as many indicators to confirm or deny whatever trend you think you're seeing. So essentially, to sum it all up in simple terms right now, is what we're watching here is this a reversal diamond pattern forming. And the only way we're going to know is not because the news tells us so, or because we feel it and we've been stacking and it's our time. Now, that's not how we do things. We look at the trend lines. We look at the charts. We look at the momentum, the volume, and the momentum, the strength. All of these things will tell us and give us more confidence about how we should place our trades, we should hedge our trades, and whether or not we should go long once this trend line is confirmed, or it gets rejected and gets dumped. Then maybe it's time to put a temporary put call or short on the item, and you can use these targets to kind of determine where you go next. I mean, you don't have to set your targets exactly that. That's just kind of the technical way they do things. Some people just will do half of that or 70%, and they'll take profits there. But anyway, I'm an amateur. I'm not an expert, but this is what I'm seeing, and this helps me give a little bit more confidence in what we can expect in the coming week or so. So with that, hopefully I didn't go as long as 20 minutes like my previous video, and I'm going to end it there. And if you like what you saw, you have any comments or questions to add here, again, I'm not the expert, but if you want to support me in any way, yeah, feel free to give me some love. But anyway, I mean, in terms of liking, commenting, I'm not making money on any of this stuff, just kind of sharing my learning as we go. So take it easy, take care, see you again next time, bye.